Hello and welcome to Virtual Investor Conferences. My name is Tim Regan, and on behalf of Water Tower Research, we're very pleased that you have joined us for our AI and Technology Hybrid Investor Conference. Our next live presentation comes from BioLargo Inc. Please note, you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Scheduled Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Dennis Calvert, Chairman, President, and CEO of BioLargo Inc., which trades on the OTCQB under the symbol BLGO. Welcome, Dennis.
Thank you. Good to be here. Such a pleasure to be able to meet with you today and share a story. At BioLargo, we've been inventing and developing great technologies to help make the world a better place for over a decade. Our slogans, we make life better. It's all centered around high impact investing to develop things that can change the world for good with a key focus on air, water, and energy. What's interesting about the business is having invested now for over a decade, we're now able to reap the fruit of that investment and witness technology adoption in a way that we talked about for a decade, and now it's actually happening. Our thesis is to invent, prove, and partner. Invent, prove, and partner. With that model, I'm often asked, how does a small company change the world for good, right? Well, you do it with great partners. So our thesis is to invent it, prove it, de-risk it, make it well situated for a disruption opportunity with the right partner. So we're witnessing that as it's happening, and we've got a couple also in the making, and we're going to talk about those with a little detail. We're trading on the OTCs, symbols BLGO. Of course, you can rely on our most recent annual report that was published just about a week ago. We also had an earnings call, a lot of detail there, a lot of risk factors, very important to understand those. Complete information, including our Ks and our Qs for sure. Who are we? Well, we're innovators and scientists focused on sustainable innovation for the good of the planet and people and animals, right? Driven on a mission to do something that's special, high impact. We focus on best in class. I can't even emphasize enough, best in class. If we didn't believe that what we're doing on some of the assets that we've assembled had a chance to be number one for disruption, transformative opportunity as using technology as a platform, we wouldn't do it. We think they're all number one. And we have a good argument in that case. And in some cases, we've actually proven it. Very heavy engineering focus. And then, of course, we focus on problems that don't have good solutions. Now, this is a slide with a lot of detail, so I'm not going to try and cover all the detail. But it is an interesting highlight. Really, the corporate office serves like an innovation engine. Finance, strategy, wrapping access to capital with the resources and the know-how to make a business deal that can work. Lots of R&D as well. Our Canadian team has received well over 100 grants over the journey of over a decade. Anyway, we have 4 operating units: a medical company, a battery tech, O&M Environmental, which is heavily involved in odor control. It's also our shining star financially at the moment. All these other technologies are coming on. And then, of course, BioLargo Equipment Solutions, which is focused on PFAS, huge issue. In each of these, there are different stages of commercialization, but by and large, we've de-risked the technology in these 4 opportunities, and we're now at the adoption stage in the partnership formation. The youngest in the portfolio is the energy, which is focused on battery tech, and the water has got its first customers for PFAS. A notable story, which we're talking about in 2 seconds, is this work in odor control. We developed a product for pet odor control and have launched with a partner called Poof, P-O-O-P-H. This is Poof. We'll talk about that in a second. And it is just extraordinarily performing well, capturing market share and making money. The last couple of years have been pretty incredible, 100% year-over-year growth. We just reported this in our earnings report. And everybody says, we don't like to forecast hockey sticks, but we sure like to actually do it. And we actually performed with a hockey stick. And so year-over-year growth, 108% this last year, came in at just over 12 million. It's really significant. Right at the edge of break even on cash flow, we show minus $2,000. Make sure that's not $2 million. That's $2,000. And that trend should continue, because, and we're going to talk about why it's continuing, but really we're watching adoption happen with great innovation, and it's awesome. And in terms of our annual loss, 60% was due to non-cash, so that's important to know. So we didn't spend a lot of cash, and what we did spend in cash, we spent on R&D. That's one of the issues. We're always inventing, so we put a meager budget to go through the thesis of proving up those technology claims. Anyway, we've had now 9 years in a row of revenue increase, and it's a great time for the company. That stockholder equity comes in about 4.2 at year end. That number should also continue to increase. We are doing more investing opportunities as opposed to SG&A, which is important, meaning that we're investing in things that make us money, right? Investing in things like equipment and inventory, things like that. So as the stockholder equity increases, it's important to understand that benchmark as we contemplate where the company can go in terms of its listing statuses and all the things that people want to know about our financial credibility. Cupridyne Clean is our industrial brand. That's the most mature in the portfolio. We've done a lot of hard work. We're doing a lot of work in an industrial case all over the country and some international. And this product is a great technical innovation in that it provides complete odor elimination, and it's super safe. It does no harm. That's the key. And so we've got adoption now occurring with landfills and transfer stations. You know, odor's not always a sexy business, and somehow we made it sexy. We figured out how to do it in a cost-effective way. And it's astonishing because the marketplace just simply didn't know that there was a way to do this in such a safe and efficient way to completely eliminate odors. And that's because of the chemical breakdown. This is chemistry that breaks down the compounds that cause odors. They don't come back. And so success and failure is all about delivery. We became expert at delivery, and we developed a data set that is beyond reproach. And with that experience, we literally became expert. We became expert in odor control. And with that expertise, we were then able to add additional services with our engineering group. So some vertical integration now is occurring. For example, we're going to talk about PFAS in a second. And having a PFAS solution combined with our odor control and our infrastructure capabilities with national companies that handle waste and large county municipal clients, it's a natural segue to bring in another solution for them. And that's proving really valuable now as leachate and PFAS are keen targets by the federal government, by industry. What does all that story tell us? Well, it tells us how we got to the point of having the tools to be able to make a business arrangement with a partner called Poof Inc. And it was developed by Ikigai Marketing Works. They created a company. We made a business deal. The business deal is pretty basic. We'll make it. They'll sell it. We'll pay for the production, make a little margin, a little royalty on sales. And in exchange for exclusivity, we bargained to receive 20% of the exit eventually when that brand is sold. And Ikigai is killing it. And Poof is incredible. If you haven't seen it, this is Poof. Goes through the whole pitch. Its key focus, as we talked about, even for industrial odor control, is really pretty basic, and that is complete odor elimination. Okay, molecule for molecule, when you deliver it in the proper way, it's going to break down the things that cause odor. They won't come back. That's number one. And number two, safe. Safe, 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 safe. It does no harm. We're actually using the product in the industrial side now for land remediation. It's just amazing. Engineering firms are actually recommending it to their clients around, a lot in California, where that operation is headquartered. But also internationally, we also got a joint venture we'll talk about in a minute in South Korea. Slow to start, but still meaningful. It's got a shot to really go significance. Okay, what's significant about Poof? Well, it represents about 85-90% of our revenue. That's number one. It also is growing at such an incredible rate, and the rate of growth, the team at Poof, it tells us that they expect to achieve 20% quarter-over-quarter growth on an annualized basis. So you run that number, that's about double. That means they're going to double year one, which they did, double year two, which they did, double year three, which is now coming. They haven't done it yet, but we expect they will. And based on our business deal, that gives us some level of forecastability. It's a really nice situation. Also, they just launched wipes. That's a wet wipe. And puppy pads are coming soon. Those were introduced at the recent trade show. If you haven't seen it, go to poof.com, POOPH.com. It's available in major retailers like Walmart, of course, Amazon, Chewy, a bunch of really big national brands and more coming on. And we expect those numbers to continue to escalate. We also have mentioned that Q1 results are in line with those expectations. We can't perfectly forecast because there's things that we got to wrap up on the accounting, but we do believe that with the order flow, we're witnessing a continued track that allows us to have confidence that over the course of the year that Poof is on track to hit their numbers as they've recommended to us. Now, Why is all that important? Well, it's a great product. It's number one. Great testimony to the technology. It's number two. Great testimony to picking the right partner. We got a good one. They're awesome. All those characteristics are all now going to play out in the medical space. We've developed a series of products in this space. They cleared FDA just prior to COVID, with a keen focus on advanced wound care, burn care, antimicrobial protection, the surgical suite, and on. Dental, dermatology, on and on it goes. Okay. But right now, the focus is primarily on this antimicrobial product, BioCleanse, for the surgical suite. We're spending a lot of money. We're putting some money to work there to ramp up infrastructure with partners that are third-party outsourced contract manufacturing, partners that manufacture product, and partners that distribute product. We're the designer. We've developed this product. It's a platform. And in that platform, it represents a whole series of products. We've got a couple that are, quote, ready and poised for the market. You can check out cleara.com or clearamedical.com, either one. They link together. And you'll see a cadre of what they call key opinion leaders. That's physician influencers who recommend, believe, support, have done the work, and are continuing to assist us in validating this technology for the marketplace. If you like what POOF is doing for BioLargo, you're going to like this one times 10. I'm not exaggerating. This is a huge product category and of great significance as a full circle story for the company. When you go back to the origin story with the founder, Ken Code, the first innovation was designed to keep his dad safe from infection in a nursing home. And here we are, right? All those years later, we're now so well poised with the data. The thesis in that claim is that we always say we've done the hardest work, not all the work. We've done the hardest, the most difficult work to get the product positioned for success with partners who can then take the ball and run with it. And with the right partners, you can go take the market. As POOF is indicating, you're taking a market. The next innovation, the AEC, is really focused on PFAS. If you don't know what PFAS is, we're going to do a quick intro. That's forever chemicals that are caught in the environment related to nonstick coatings. Brands you've heard like Teflon. Teflon's a good one. There's a series of brands that have been used in consumer products, and it's continued to be used, and now it's a public outcry. The estimates are about 45% of the United States drinking water is contaminated with PFAS. People refer it to as a contaminant of the decade. We sometimes call it contaminant of the century. If you look at the money and the problem and the litigation, some of the largest tort reforms in the history of the United States are happening now, and some major settlements. And then there's also a multi-billion-dollar appropriation that was just announced yesterday by the White House to help solve this problem around the United States of America. It's a global problem, though. Forever chemicals. They're forever because nature won't degrade them. And as it turns out, if they won't degrade, if nature can't degrade them, then they kind of hang around forever. Forever chemicals. If they hang around forever in accumulation, they can bioaccumulate, and they're linked to birth defects and cancer. Okay? Birth defects and cancer. PFAS is everywhere. It's in food products, packaging, cosmetics, oil and gas, carpet coatings, right? A lot of coatings, a lot of non-stick coatings. So just yesterday, there was this announcement. It's really important, and we're not going to be able to do a deep dive, but the announcement yesterday was confirming a 4-part per trillion testing. And really, the rules are going to push the industry to make change. Not just in the way that you deliver products, of course, but the way you remediate and clean it up. And what these regulations have done is they've raised the cost of treatment in a significant way, primarily because of the waste handling. So when you take PFAS out of the environment, what do you do with it? Well, if you take it out with carbon, we're going to talk about that, you end up with a lot of carbon. If you take it out with our system, we literally are 1/42,000th of the waste stream. Do you hear that? That's like a pound versus 42,000 pounds. 2 pounds versus 84,000 pounds of waste. So our thesis is really simple. We started this innovation 3.5 years ago. We've got our first customers. We've got a significant pipeline. The standards that were published yesterday reaffirm what we believed would happen. We got one right, and that is that these were going to be deemed hazmat materials. The cost to handle and treat was going to go astronomically high. The federal mandates are going to be put in place. And really, it now allows the industry to know what they need to do over time. Now, remember, some of these installations will take a year or two to get installed, so they're heavy capital equipment based. We have a marketing channel with over 100 reps. We're looking at about 3 projects a week now. And in that pipeline of opportunities, we've got our first. It's a small account in New Jersey that will install in October or November. It's about $500,000 worth of revenue, by the way, so that's pretty small. In the projects, they range from about $500,000 all the way up to about $8 million. Now, there's a lot of competition in this space, okay? A lot of competition. When you compare ours to the others, we win in a couple of really dramatic ways. One is our waste stream is just so extraordinarily small. The other is that we can save a lot of money. And number 2, we can work in all sorts of different waters. And number 3, a fraction of the waste stream. There's the numbers there. We can come back to it, but it's a dramatic value proposition. And so the trick, if you will, the art to getting this adopted in the marketplace is to demonstrate full-scale deployment. Full-scale deployment. That's what we're doing now. It's not done, it's in process. And as we achieve full-scale deployment, we already have a backlog, or a pipeline is a better way to say it, a pipeline of business, people that are interested in doing business with us that is so significant, it's got us really scrambling. And selling channels that are so robust, we're just extraordinarily excited about this opportunity. How it works is real simple. We're going to give you there's a good graphic. You can see it happening, right? So there's 2 chambers, there's an electrode, 2 plates, water flows through. The PFAS is migrated by its electrostatic charge. How about that? How simple, right? Well, it's simple in its concept. In its art, it's actually pretty complicated. But if you can migrate it and then electrochemically bind it to the surface of a membrane, what you've done is selectively extract the PFAS. How in the world can we do 2 pounds versus the competition that does 80,000 pounds of waste? Well, this is how you do it. You selectively extract the PFAS, and that's what we're doing. That selective extraction allows you to super concentrate. If you can super concentrate, you can manage destruction. That's the whole concept. Now, this is 4 years of work getting the first adoption. It promises to be a disruptor in the market. And today, right, in that cycle, just like the other innovations, what are we doing? We're inventing, proving, and partnering. Right now, we're partnering with sales channels. We're partnering with channel partners. Ultimately, it's going to partner with some of the biggest companies in the world, because it's the solution that begs for the time now to solve the problem, as evidenced by the regulatory pronouncement yesterday by the EPA. We're talking about yesterday. Okay, 4 parts per trillion. And there's a bunch of technical speak in there. Long chain, short chain, we do both. Fraction of the waste stream. Waste streams management under hazmat, highly regulated. You also have to manage destruction. And we check the boxes in so many ways. So we are a disruptor. We're a disruptor in a market that promises to be in the billions. And we're marching. This is just evidence of trials. We're doing about 13. We're now going into the field for our first scaled deployment, as we talked about. We've tested all sorts of water. The data is way too complicated. All we want to show everyone is that we've done the work. We've proven the results. Most of the data was performed actually at University of Tennessee. So a lot of third-party validation here as well. Here's our mobile treatment unit. Here's an example of the cell. Flow the water through, migrate the PFAS, collect on the membrane. And this is a unit that we can take anywhere in the world and show people how it works. This is to show what a scaled unit looks like. That's about a 1,000-gallon-a-minute system. In the municipal and industrial world, that's not that big. 1,000 gallons though is pretty healthy, right? And so that's about 30 feet, right? 30 feet by 20 feet. So you get order of magnitude sizing. And what you do is you spread the water, run it through, it does its job, okay? And our first target, New Jersey, should be installed in October, November. The other thing is we've got a big selling channel. Garrett Callan, we want to mention, largest privately held water company in North America. We have another asset that we're focused on commercialization, as are they focused on selling our PFAS solution. So they've got a heavy emphasis in chemistry and big client base, 110 plus years history. And so this is a great situation for us to be in. We've got a number of opportunities in recycling cooling tower water. Our water company is positioned as a solution company, and technologies are tools in the toolkit. And it's a lot going on. There's a lot going on, so we're excited. Long development cycles, I can tell you. High capital intensive work, but significant. Okay, last, and before we run out of time, I want to make sure you hear about Salinity. A little over a year ago, we acquired a battery technology, right? The first question everybody wants to know is, what the heck are you thinking? Well, what we recognized in this technology was about 8 years of development. And one of the co-founders passed away, and his son salvaged the technology. And they brought that technology all the way to the verge of producing commercial-ready cells. And when we took a look at it, we said, oh my gosh, they've done so much work. And the focus for the salinity cell is fixed site long duration, not EV, right? So what do you do with that? Well, number one, you store energy from renewable energy, balance the grid. There's all sorts of things. But AI, oh my goodness, AI is driving an energy requirement. What's two things that AI needs to go mass scale? Water and energy. And to get energy, what do you need? Batteries. Renewable energy is wonderful. Can't have renewable energy if you don't have batteries. Okay, so this is a great situation. It's driving extraordinary demand. Just 2 days ago, Elon Musk made the comment that the Tesla would make more money in fixed site long duration than ever contemplated in EV. This is the next wave, and we're in such a good spot. Big data. Who needs lots of batteries? Big data, grid scale storage, public utilities. This is a massive emerging field. So what's the problem with the old batteries? Well, lithium's got a few issues. It's got geopolitical issues, of course, and they're prone for fires, and it's expensive. And they degrade over time. They don't last as long, and they don't have as good efficiency. So we check the boxes in all those, right? And there's our first cell. This is a sodium battery. It's got sodium and sulfur and other chlorides, by the way. There's a whole story there. I don't have time to go into it, but we're not a sodium sulfur per se because we operate at a fraction of the temperature. Sodium sulfur typically operates at about 500 C. We're down at about 160 C. So that's a low temperature sodium battery. It's non-venting. That means no self-discharging. You don't lose charge. When it's cool, it runs 160 C. When it's cool, you can transport it and save energy indefinitely. We've proven a 10-year life cycle. We think it's going to be a 20. We haven't proven that yet, but we're pretty sure. With no moving parts, no degradation, no rare earth elements, we have a winner. This is a lot of data. I can't go through it for this presentation, but I'll summarize. 2.9 times the energy density, nice high voltage, no runaway thermal, no runaway fire risk, no real safety issue, earth abundant materials, and it's extraordinary low risk. It's a stable battery. We think we've got a winner and have a chance to be a disruptor in the marketplace. So how do you get there, right? How do you get there? Well, the target is to build two designs. Grid scale storage would be like these 1 megawatt hour units on the left, or even 25 kilowatt hour units on the right. But we think the big play, the big opportunity for us is not necessarily selling batteries, but we're going to talk about that, is selling battery factories. Think about that. Don't sell batteries, sell battery factories. Yeah, empower deployment across the world with a design, leveraging intellectual property and know-how, consolidating supply chain. That's what we do. That's what we've done in all other technologies. You shouldn't expect it to be different. So we built a little factory. We spent about $1 million on this. Now here's the remarkable thing. That small factory, we believe, assuming supply chain adequacy at reasonable cost, can produce about $4 million worth of batteries a month. $1 million investment. That led us to this conclusion that what we needed to focus on was building factories and then helping other people capitalize them under licensure as a service provider so that we can consolidate the supply chain. And it led to a thesis. And here's the thesis, which is still shaping up. Make sure we're clear. This is the youngest asset in the portfolio. Everybody else wants to make batteries and sell them. The problem is it's traditional. It takes extraordinary capital and time, 2 and 3 and 4. There's a couple of companies that's been 8 years preparing to now handle $1 billion worth of business. There's companies in the marketplace that have a good battery, a decent battery. It works, not as good as ours, we believe, with over $1 billion to $1.5 billion in backlog of clients. There's a 2-year wait for grid scale storage with Tesla. So if you're in the renewable energy, you can't get batteries. And if you can, you're paying an exorbitant price. And the thesis is, if you have a better battery, you can sell them before you make them. Well, so that's what we're talking about. Generate cash early, right? Work with partners who want as many batteries as they can possibly get. Be in the battery business of manufacturing batteries, not selling batteries. And then ultimately, if you have batteries, you can go vertical. Going vertical means being in the grid scale storage business or capturing renewable energy at large scale. One of the projects we're looking at is a site with a 500 megawatt hour solar with these 500 megawatt hours of batteries. That's about a $250 million order, just to give you order of magnitude. And we're not ready for that, right? So what we do is we look at that and say, we want to partner, bring in capital, build a factory, supply the need, and help our partner get what they need, which is the tools so they can do their business. This is really ultimately about a supply chain backlog or a clog, and unclogging it with a know-how and a tool to empower domestic supply, long duration, highly efficient batteries that can last 10 years. Okay, so we think that's a winner. A lot of work to do. We're here now at the make and test sales stage. That's the second rung on the marching order. Once we do that, we need to scale up, continue testing. We'll then make partnerships, focus on the component manufacturing to scale up manufacturing there, and then ultimately develop offtake agreements with partners. And once that happens, it's just a question of how many do we want to do? How much time in the day do you have to make that happen? It's a very exciting proposition, and it starts with a better battery, right? Best in class. Remember, that's what we said when we started. We do have operations mostly in domestic U.S., 4 operating units. We're in just a wonderful position. We've got cash in the bank, no debt, a little bit of SBA loan, 30-year money, very, very small. And we're in a spot now where we're picking partners and we're preparing for a significant launch of assets that we've been investing in for well over a decade. Now we get to watch the fruit bear out. Okay, so that'll be it for the moment. I'll stop and let's open this up for Q&A. Okay. Alex, are you with me? No, there we go. Okay, well, let's see. I see questions. So maybe that's what we got. There we go. Okay, so here's the first question. What were the drivers of your impressive revenue growth 2023? Well, POOF was number one, 80% of the growth. We did witness some incremental growth in our industrial odor division, but that's more like 10, 15% per year, not 100%. So definitely it's POOF. And then secondarily, we have other opportunities that can create that same kind of explosive growth. So as we look forward, we believe that the POOF team will continue to do what they do, which will double. We'll see incremental growth in the other operations. And then as we launch some of these platforms like our medical, we'll have another chance for explosive growth. Okay. Capital requirements is the next question for the next year or two development. What we've done, a couple things there are really interesting. We're able to finance a lot of these development works in through the subsidiary. So in the medical company, giving an example, it's about 13 years worth of work. It's incredible. We've invested about $16 million. And as a result of that dilution, at the subsidiary level, the parent company, BioLargo, owns about 53% of the equity and 6% royalty. It's got high discipline in the use of capital, all designed to take through this design phase to get to the point of de-risking that asset for adoption for our major partners. That's where we're at. Thank God, it's great. It's really exciting. So the opportunity to deploy capital, the battery technology will need some capital. We believe we can bring it directly into that subsidiary so we preserve dilution. And then the nature of our business is we're selling services and products, so we get paid. So we don't need a lot of capital to execute our core plan. If we want to make some things go faster, we want to be very careful with that. So we'll need to spend some money on the battery tech, and certainly to do some scale up on the manufacturing of component side. But really, it's designed to get that partnership established. And we're sitting on about 3.6 million in cash, 4.6 million in net shareholder equity, and we're in cash flow break even Q4, and so we're right at that moment of generating positive cash flow. And of course, we also think if the numbers continue, we can head towards profitability pretty soon. Yeah, research partners for battery tech and IP protection. Good question. A lot of the IP is in the trade secret and know-how, and we will be filing for patent protection prior to commercialization, primarily focused on the manufacturing art itself, primarily. There's a lot of secrets about this technology never been published, and so when we acquired it, some of the seminal patents that were part of its origination are important, but really it's a lot of new IP about how you manufacture it to scale. Sodium-ion batteries. It's actually a sodium battery, right? There's not an ion exchange, so that's very important. The timeline to commercialization. If all things being equal, capital to execute, you're probably 100 days or so in testing or so. Give me a little grace. You got another 100 to 120 days worth of scale up for the design of the cell, reproduce the data. At that point, you're now focused on proving out your ability to scale for manufacturing, securing partnerships, and that's commercial. So understand, given the nature of our business, when we secure a partner, we're getting paid. We're getting paid. Really critical. We're getting paid to build someone else a factory. So that's design and engineering and licensing. Okay. Then when it goes commercial, which is probably 1.5 to 2 years, right, for that project to get full commercial, we're vending components, which is the things that help make the battery. And we're in a licensing participation as a minority equity shareholder and a royalty receiver. So commercialization happens much faster under our scenario than most alternatives. Okay. There we go. Do we have any other questions? I see a couple here. I think that's it for the moment. So let me just summarize for a second. Let's check one more question, see if anybody's got any questions. We're doing quite a bit of information sharing. It's a great time for the company. I'll just wrap up with a quick summary. The deeper you dig into the business, the more you're going to like it. We got a lot of meat on the bone when it comes to these innovations, and a lot of work and money have been spent to prepare them for commercial adoption. As partners, we experience accelerated growth and margin, and that's our job to make that happen. So we thank everyone for attending today. Thank you for following the company. Please track us. We always say about every 6 to 12 months we morph as we evolve, and it's just a great time to be part of BioLargo. All right.